Hello, everyone. This is Andrew Berman. Thank you for joining us for another DealDesk webinar. So excited that you joined us on this amazing Wednesday. Hopefully, it's amazing wherever you are in this world. So I love DealDesk because DealDesk is the opportunity that business gets done. I mean, this is not actually just a, hey, this is in theory, you could do this kind of business, but these are where deals happen. I've seen actually brokers come into these sessions and walk away, with solutions for the borrowers. Those difficult deals that you've been trying to get funded, they get done here. So today, I'm so excited to have Angel Oak. We're going to be focusing on the DSCR. This is how to finance investment properties. I'm super excited for you guys to join us today. And with me, I've got the legendary Lisa Lee, the Aris Sales Manager for Angel Oak. Lisa, thank you for joining us today.
Thank you.
So listen, before we get started, everyone, please do me this favor. I'm going to do it right now myself. Shut your cell phones off, put it to mute, do whatever you need to do. I promise you, we will be in and out of this inside of an hour. If we can give you a couple of minutes back, we promise we will, but we will not go over an hour. I will promise we'll be a good steward of your time. But we just want your focused attention. So shut down anything that you have open. Shut down Outlook, shut down Chrome, shut down Encompass, Calyx, whatever you have open, just please give us your attention, for the next 60 minutes. I promise you, we'll help you get more deals done. And what's also nice is we're going to get more deals done with real estate investors, which thing I love about real estate investors, we just did our conference, our Originator Connect conference, and I was talking to a broker who does a ton of these kind of deals. And she was saying actually that she did 3 in 1 month. 3 in 1 month. If you're dealing with regular borrowers, if you're doing 7 in a lifetime, that's a lot. 3 in a month. I mean, is there anyone else here that would like to do 3 deals from 1 borrower in a month? Yeah, that's what I figured. So, all right, Lisa, excited to talk to you, to have you join us. Want to tell us a little bit about the awesomeness that is Lisa Lee?
Sure. So I'm Lisa Lee. I'm from Salt Lake City, Utah. I've actually been in Utah my whole life, so lived and worked here forever. And I've been in the industry for 30 years, which ages me quite a bit, but over 30 years, and mostly as an account executive. So back in the day, I spent most of my time in the subprime world, and then of course now in non-QM. And that's kind of the space I prefer to be in. I love to work with and partner with brokers and loan officers to put these loans together for people who ordinarily wouldn't be able to get financing, and also to create a return customer for the brokers, for the loan officers. So we get them into immediate financing so that they can seek advice to get into better financing later. So it's a fun deal. It's fun to put these puzzles together and get them to work. So I like I say, I really love everything about Utah. So it's being outdoors is what you love the best about Utah. So.
No, that's for sure. And by the way, just everyone, if you remember how this flows, we need your questions. I've got a bunch of questions that we're going to go that people submitted. But if you submitted a question this morning, or you have questions that are coming up now, use that question and answer box. The only dumb question is the one you don't ask. So please, if you can, Lisa, talk to us about the awesomeness that is Angel Oak.
Well. So I've been with Angel Oak for 5.5, almost 6 years now. And, some of the greatest things about Angel Oak and what it matters to you, first of all, being vertically integrated, 2 things why that means a lot to a broker and to your borrowers is, 1, the second that loan is submitted to Angel Oak through the time of funding, every single person that touches that loan is an Angel Oak company's employee. And that means a lot. So the other great piece about being vertically integrated is that we never have to leave outside of our company to make any exceptions, program adjustments, enhancements, pricing, anything like that. So we fully entrust our staff and management to make those decisions. Exceptions, for example, we don't have to call out to the investors to see what we can approve or not approve. It's all within our own walls. And so that means a lot. We work off of securitization. So basically our own capital assets team, takes over those loans, packages them, and then securitizes them on Wall Street. We have done 34 securitizations at this point, and that is huge to know that they're AAA rated because, of course, it's non-QM. So it's a really huge piece. We can brag about being the lender, which we are, and we've been the #1 lender in the country for a long time. We all strive to do every single loan as well as we can and get better for the next one. So every deal that we close is a success to us, to make sure that that experience is good for the broker and the borrower. But that's what gets us to be the #1 lender, of course. So we are looked at as the largest originator in the non-QM as well since 2013. So that helps us out. As far as it goes, this is the greatest thing, and there's always so much room for improvement. And the thing to remember about non-QM is that there's this huge human element that I think all of us have lost with the conforming space, because there's no box that actually tells you, pops out an approval and says you approve or don't approve, and here, this is what you send us, just 2 pay stubs, W-2, and here's your PIW, and you're out the door. So with non-QM, of course, it's a manual underwrite, which is amazing, right? So you're back to the old school, literally someone's virtually flipping through, these loans and to make sense of them, right? And so we do need some access to the underwriters, which we have full transparency with our underwriters. Each one of us account executives has our own team of account managers, and support people that can help us to get the answers. And bottom line, if we need to chat with underwriters, they're full access to you and I. So that's what works the best. Again, it's a common sense approach to underwrite. So, we want to take a look at all of these deals to see if we can put the pieces of the puzzle together, basically. So, of course, non-QM helps to differentiate you from others. Of course, everyone's been super busy in the last few years with the conforming stuff and the rates that have been crazy. But even now, I don't know, you'll do a poll to find out how many have done a non-QM loan, but just diving into non-QM, learning how to sell, but even more importantly, learning how to close a non-QM loan and choosing the right lender for it is huge. And that will differentiate you from others as far as creating a professional out of you, really, to do non-QM. So our IT department is constantly working to improve our website and all of our tools so that it's more user friendly. And if you look at it today versus even 5 years ago when I started, it is incredible. So very user friendly. And of course, we have AEs, account executives, in every one of the states that we're licensed in to help you through everything. So we've got the best, most well-trained professional account executive staff that you can find. Of course, I'm going to say that, but I think so.
Well, so, and just speaking from the experience that I've had actually working with you guys, and hearing the broker feedback, one of the things I've learned about you guys is you're always looking ways to say yes. It seems like the full non-QM lenders, the lenders like you guys who are just focused, especially Angel Oak, you're always trying to find excuses to say yes. How can you say yes to it? And I think always a great thing. Actually, you're going to hear this a lot throughout this webinar, is talk to the account executives, because they're going to try to find ways to work deals that you might not think it would be able to be done, but these are very logic-based loans.
We're paid on yeses too.
Yeah.
So it's important we get yeses. We like those.
Fantastic. So, I hear a lot of people talk about, like the bank statements being like the kind of like almost the gateway non-QM product. They want to talk a little bit about bank statements before we start, getting our hands dirty with DSCR, the Investor Cash Flow.
Sure. Real quickly, obviously the self-employed, the country is going crazy with, and even through COVID, we saw a real huge increase with the gig economy, So we're not even talking about business owners in particular. It's literally anyone who has some part of the gig, some gig work, right? So a little 1099 side gig to a business owner. This offers them the opportunity, to get into financing where they really couldn't qualify otherwise because they write off too much on their taxes, and that's smart. And that's what you do when you're self-employed. We actually will look at alternative ways to show that income, which is 12 or 24 months business or personal bank statements. We do most of our jumbos, we'll see on the bank statement program, of course, up to $3 million without exception. And we see most of those jumbos on bank statement because, of course, they are self-employed, successful people, and we can bring more income, significantly more income we can show out of bank statements usually, versus trying to squeeze every penny out of a tax return. So 2 years from a credit event, again, no tax returns. We do require 2 years self-employment. So.
Fantastic. All right. Now on to our star of the show, Investor Cash Flow.
So our Investor Cash Flow program, this is our debt service coverage ratio product, right? You've seen a lot of these coming out in the recent couple years. Our Investor Cash Flow program does require that we have 4 years from a credit event such as BK, foreclosure, deed in lieu of, short sale. It's a no income, no employment, no DTI product, right? For investment only. Okay, so it's an incredible deal. All we look at to qualify this loan, because of course we have to have something to qualify the loan or ATR, and we look at the rents of the subject property versus our new PITIA payment. So that's the debt service coverage ratio calculation. It's basically rents divided by the new PITIA, and that's it. We look for a 1-to-1 ratio to start. And so that means the rents are going to be equal to or greater than our new PITIA payment. So they can have unlimited properties universally, which sets us aside from the conforming QM stuff. And they must own a primary residence to qualify, but we also case by case can look at those people who have special circumstances to where they rent their primary residence, but they have history of having investment products or investment properties. So we can take a look at those. We allow these to be closed in an LLC, max 2 partners. They must qualify for the loan. It will appear on their credit report. So basically it's vested in the LLC. So all of our rates are 30-year fixed, but we do offer, which has been very huge lately, a 40-year interest only on all programs and including this product. So that's really helpful for a lot of these deals to take a look at, cash flow, in this different rate environment that we're looking at right now, especially. And we offer delayed finance too, which is super popular. So
just out of curiosity, do you calculate as far as the ratio based on the 40-year interest only, or you do it based on the 30-year amortized?
Great question. And we actually base it off of the 30-year full amortized payment. So that's a really good question. So the debt service coverage is still calculated that way. Yes. Great.
Very cool. All right. Awesome. So let's go here. And wait, before we get into this, I want to ask everyone who here has done non-QM loans. So we're gonna launch this right now. I want to know if you've closed a non-QM loans in the last 12 months. So on the screen, let us know if you've closed a non-QM loans in the last 12 months. In the meantime, I'm going to give a thank you to Angel Oak for giving me the awesome swag today. Always hustle. I'm so sure if you're doing some business with Angel Oak, they'll send you one of these shirts. But so, all right, keep those votes coming in. We already have right now. Let's see, we've got so it looks like everyone's voted. Fantastic. All right, let's see what we have here. We're going to share the results here. And there we go. So we have 58% of the people in the room have closed a non-QM loan in the last 12 months. I just love seeing it. Those numbers keep coming up more. Lisa, you're out there. Are you seeing a lot more brokers in the last 12 months, doing more non-QM?
I have, especially in the last 6 months, I'd say even more so, just, with the shift in the market and people, they have more time, right? Basically bottom line, and they're seeing more interest in, and they're having to shift their marketing too. So I'm seeing people with a lot more interest in the last little while. New loan officers coming out everywhere, which is exciting for us, so there's still so much potential out there to grow, but yeah, it's starting to shift. So we love it.
Fantastic. All right. So we got a bunch of questions that are already coming in right now. But we're going to go first to the questions that have been pre-submitted with registration. So again, these are your questions that you guys have shared with us. If you see something on here and you have another question, just please use that question box and ask your question. So first question, can you do 10% down for a DSCR?
Actually, no. So the debt service coverage ratio product, the DSCR, is an 80% max loan to value. And being that it's an investment property, we do not allow any gifts for that. So it does have to be the borrower's own funds. And we do ask for 6 months reserves on all programs, including including the ICF program. So, but we do offer an 85% loan to value if it's possible to get them run by bank statements or full doc, just so you know. So if it's an investment property, they can go a different, documentation, we can go that direction.
Fantastic. All right. Next question. Are borrowers with C10 work permits allowed to use a DSCR loan? Good question, Jamie.
So it is a really great question. So we do offer a foreign national program that is now, we just re-released it and did attach it to the Investor Cash Flow product, but they must live and work outside of the country and be a true foreign national. And that's the only loan that would be, that would work, or the only situation that would work on a DSCR program.
Fantastic. All right, next question. Bank statement loans requirements, ITIN loan requirements and rates. So we did, there's still talked a little bit about that, but I don't know, maybe if there's anything else you want to add to this question right here.
Yeah, real quickly. So our ITIN loan, we did release an ITIN, I believe a year or so ago, and the ITIN product is a full doc only. 75% loan to value, full doc only, so 2 years tax returns, the whole thing. We don't allow the ITIN on the bank statement product. And rates, it just very much depends. You can always use our pricing tool online at angeloakms.com. You do not need a login to use the pricing tool. Just make sure you update, all the buckets. So you make sure you price it right with bank statement loan, etc. Add ITIN, and you'll get accurate rates for today's pricing live. So that's the best way to get our rates as far as it goes.
But by the way, I love that tool. That tool is awesome. It's great.
Awesome. You can put it on your phone too, which is great.
Yeah, I've done it. I play with it. It's great if you really want to quickly understand the power of not just the DSCR product, but all your products. It's a great tool. All right. So next question we have here: best ways to find DSCR and other investment loan prospects.
I love that.
Any idea for Tim?
I love that question because there are so many ways to find these DSCR loans or the prospects that are out there. And usually starting with your own sphere of influence, the people that you go to work with, closely, such as CPAs, financial advisors, of course, people looking to find ways for others to invest in properties. People are anxious to look at properties. There are a ton of investor groups out there as well, like small investor groups that you can look up in your area as well. Of course, marketing on social media is huge, and going to your realtors. Realtors, maybe if it's just a claim, but every realtor claims to know that they know a lot of investor groups and this and that and the other. They love to do these type of events as well. We have presentations set up exactly for you, the broker, to actually go in and do these presentations to present with your broker to the brokers for these investor cash flow loans. And they are huge. Everyone is very anxious to learn about these different options and products. So I just want to add one more thing, and I'm sorry. But banks and credit unions are a great way to take a look at these as well. They just have no options for these type of people, and they don't want to let them down. So they're not, it's not going to hurt them to refer this loan to you, is I guess what I'm saying. So that's a great place to look to.
Yeah, but it is going to hurt them to just say no and just let the prospect walk out of the room and then just go to try to find another place that's going to potentially offer this, and then maybe do actually more business for them and take their business away. So you're 100% right. I've heard originators talk about actually, using the banks and credit unions as a great referral source. So awesome. All right, next question. Can any MLO intake an application on a DSCR loan in states that they're not licensed in?
That is a great question, and it is a business purpose loan. We are in the works of getting this taken care of. So we're actually working on allowing the loan officers to take application in states that they are not approved in. That is not set up yet with Angel Oak Mortgage Solutions. So, but we've been told that that's coming. So that'll be a great add.
That is awesome. I'm very excited about that. Okay. And you talked a little bit about this. I don't know if you want to add anything to this. So can foreign nationals use DSCR? What conditions for foreign nationals to invest in DSCR? So
perfect. So there are some limitations for the foreign nationals. Of course, this makes it a no income, no employment, no DTI, no credit, right? So it's a great loan for these guys. They're very easy to do. The foreign nationals I mentioned must live and work outside of the country. It's a 70% max loan to value. The only other two catches are that we require 12 months reserves for the subject property itself, and that also that they have 60 days of seasoning funds, where versus we usually only ask for 30 days seasoned funds, right? So they want to see 60 days seasoned funds, 30 of which in a U.S. institution, right? So, you know, the most recent 30 days would need to be in a U.S. institution, and that's it. So, but other than that, they qualify. They just need to make sure their debt service coverage ratio is 1-to-1. We don't have any compromise on that. So.
Fantastic. All right, next question. Oops. All right. Can you do DSCR flips with renovation funds?
So we are not in the fix and flip business. So we do, you know, obviously, I'm not sure with renovation funds, but how they're looking at that as far as what that question is. But so if you're purchasing a flip or you're planning on flipping the property, we're really looking into more of a long-term situation. The other thing we can run into as well is that the property must be in good condition to close the loan. So there can't be any, you know, it's got to be functional and livable space for us to be able to close the loan for them. You know, so that, I guess that's, maybe I'm not completing the answer, but that's not the business that we look at. You can, of course, pay off hard money loans. You can, you know, we actually will do delayed finance, like I said before, to pay off hard money loans and or recoup their assets if they've put it into it. And then we have a zero seasoning requirement for a rate and term refinance to pay off any of these funds or, you know, renovation costs. And if it's a hard money loan, of course, and then 6 months seasoning for cash out. So I don't know if I'm going around in circles, but.
No, perfect. Great. Awesome. All right. So any further guidelines for DSCR?
You know, they're really simple loans as far as it goes. The other guidelines that we do look at is we must see their pay history on their mortgage, right? So we do want to see 12 months mortgage history. We do allow a 1 times 30 on the mortgage now if they have had 0 times 30 in the previous 13 to 24 months. That gets kind of complex, but so basically we do need to see the mortgage history on any properties that happen to pull up, right? So if it's paid off, you know, that's great too. We just need to prove that they're paid, but we do want to make sure that they qualify credit-wise. They also have to have either 3 lines, trade lines with 12 months history, or 2 trade lines with 24 months history to qualify. So that's just a common trade. We go down to 640 credit score, which was just put back out this week. So that's exciting to know. And it's just getting right back to normal, just slowly but surely. So we do come with a 3-year prepayment penalty that's standard. You can buy it down or out, either in the rate or upfront. So.
Fantastic. Always looking for those excuses to say yes. I love it.
Mm-hmm.
Now, just out of curiosity, along those same lines, we're talking about actually as far as lates. What about COVID situations? You know, how are those treated?
Yeah, so we will allow them to have been in a forbearance or entered a forbearance. They have to be out of the forbearance and have paid 3 payments since in a timely manner. And they could have only gone down 3 payments in the forbearance. So if they've gone ahead and they're out of the forbearance and they've made some timely payments, then they'll be okay.
And if they deferred those 3 payments towards the end, is that okay? Or do you want to see them pay that before?
No, that's okay. We just want to see canceled checks for 3. You know, if it's not recorded on credit or whatever, we just want to make sure they've reestablished the payments and have made 3 payments since. So we're not going to look at, you know, whatever's put on the end of the loan or whatever else. So.
Fantastic. All right, everyone, keep those questions coming in. So can you do DSCR for first-time home buyers? Maria wants to know.
So again, the debt service coverage ratio is for investors only, for investments. We can do the first-time investor all day long, but they do have to own a primary residence to qualify for this loan. Of course, we can't do. We have to be very careful with occupancy issues on this deal. It's a stated type situation, so people, you know, get tempted to buy these as non-owner occupied properties, but tend to, you know, would like to live in them, and we can't do that. Obviously, there's some instruments attached to these loans that we are not able to offer on a primary based on Dodd-Frank. So we do need to make sure they have a primary residence. This is for investment only.
So now, what if it's a case like, let's say, just throwing out a scenario, let's say someone has they're in a luxury rental, they're spending $4,000 a month on their rental, and they're looking to invest in a property that is apparently less than what they're in right now. Maybe it's a $250,000 investment. Will your underwriters consider something like that, considering that they're that they have a primary residence, but it's not that they're owned? Is that something that we can go to underwriting on?
We will consider those. In fact, like I say, what we run into the situation of is what we want to see: their rent history, their pay history on their primary residence, what the situation is. You live in New York, so a lot of times it's expensive to live in New York City, and it makes less sense sometimes for people to actually own in New York City, but they could purchase investment properties outside in the outskirts that they could start investing and doing that sort of thing. So we have those. It's a case-by-case, consideration for our underwriters to take a look at those. We do prefer that they have some investment or landlord history on those in those situations.
Yeah, makes sense. All right, next question. Borrower has great credit, but recently on disability. Buyer wants to buy a beach home, has down payment money. Question from Joy.
So this would be the perfect guy. Now, wants to buy a beach home, is on disability. I'm assuming they are talking about wanting to buy a new investment property. Since we're talking about that. Yeah. So if they're talking about a DSCR, this would be perfect for them because it's a no income, no employment, no DTI. So you're not going to state any of that. We wouldn't know he was on disability. So you're just literally going off of the debt service coverage. So that would be perfect for this situation as long as he's planning on buying an investment property.
Fantastic. Beautiful. All right. So talk about, qualifying borrowers for DSCR loans.
So again, it's a no income, no employment, no DTI. So what you're going to look at are the rents of the subject property that are based off of the market rents that we find on the 1007 that we would request on the appraisal, right? And they're going to take a look at the market rents versus the new PITIA payment. And if it breaks even, 1-to-1, you're good to go. We actually do have some considerations. So if you're at 80% loan to value, but the person has a 700 or higher FICO score, we will actually even consider those that are between 0.85 and 0.99%, which gets quite detailed. But so if the rents come in a little low, you're still good if you have a 700 score to 80% loan to value. And we are one of very few that actually offer a no debt service ratio coverage loan. So you can waive the DSCR on these loans if you choose to do that with, either a letter, or we suggest you get the 1007, of course, but if the rents happen to come in too low, it's a bump of 5% on the loan to value. They must have a 700 score and you can waive the debt service ratio coverage. Then it's a no income, no employment, no DTI, and no rents. So we have that option as well.
Wow. Okay. That's pretty impressive.
Yeah.
And all right, next question. Sorry, there's another question. ITIN borrowers, which I believe we've already answered, but if you want to answer that again.
I'll reinforce it. So the ITIN product is, our ITIN product must be a primary residence only, and also full doc only. So it wouldn't qualify. The only option we have is foreign national for this product.
Okay, fantastic. Next question. What are the advantages of working with Angel Oak? And I know we've covered that already, but maybe Casey didn't hear that, or someone else. So if you want to just talk again of the advantages.
So I would say definitely some of the advantages are that we are vertically funded, as I mentioned before, which gives us a consistent message from inside and out for us to help you guys with, right? So we have flexibility as far as our considerations and exceptions are concerned. So even though we are a non-QM lender, 30 to 35% of our loans still require an exception. And we can get that, the same day that loan's in underwriting, because of course we, our management and underwriting staff have that ability to make those decisions on a case-by-case basis without having to go outside of our product. You never have to worry about who is this loan closing with? When is it closing? Is it going to close? Is it funding? It's all Angel Oak companies that takes care of your loans. And so that's a huge, huge plus. We also, our staff from inside and out is, all of us are going to say this, but the top-notch account executives who are held to accountability through the end of this loan for their pre-qualification. So, it's not like just scribbling it and throwing it to the wall and hope that it goes through underwriting. We actually, and we'll get the calls from underwriting. Why did you pre-qualify this loan? And what were you thinking? And how, so you can hold us to a high standard as far as it's concerned with account executives. We've got the best of the best. So.
Yeah, I've seen it. So, hold on for a second. Let me just go back when I know, stop. I apologize, folks. Okay. So, let's just do this. There we go. Okay. You mentioned this before about prepayment penalty, but in case I missed answer, Kyra wants to know if there's prepayment penalties on the DSCR loans.
So it's a 3-year standard prepayment penalty that we start with. You are able to buy down or buy out the prepayment penalties. So.
Okay. All right, next question. Requirement for documents, timelines, first-time investors, LTV, appraisers, and how to price. Sarah needs to know it all.
I love it. So for requirements for documents, like I say, it's going to be so it's a no income, no employment, no DTI, which I keep saying that, but it's just to remind you that we don't need to see any documentation for their income or employment on this loan. You're going to need assets, 30 days of seasoned assets, right? You're going to need 6 months reserves. You need HOI, of course, and make sure that it has replacement cost estimator on there. That seems to be something that holds us up. You're going to need something to show mortgage history on your other properties, which means if it's not reporting on credit, we may need that. And, basically other than that, all we're going to be looking at is the appraisal and that, debt service coverage. So really, really easy that way. For first-time investors, we will look at first-time investors and we love them just as well as those that have a ton in their profile already. So if they're looking to become a first-time investor, this is a great product for them. LTV wise, we go to 80% loan to value. We'll go to 75% cash out and on 2 to 4 units. So the appraisals, like I said, they're a normal conventional appraisal that we're going to add the 1007 to that appraisal. So, and then how to price them, we talked about this earlier, but you can always go on and price these online at angeloakms.com, and the pricing tools are available to everybody. You do not need a login to use that. You'll just click on the non-QM quick quote tool, sorry. So.
Fantastic. And so you talk about the difference between the LTVs for purchase versus refi. Just to, you might want to touch on just delayed financing. If anyone's
Sure.
here doesn't know how delayed financing works, maybe you can just share a little bit about that.
Yeah, I love that. It's been crazy and really been in high demand to do these delayed finance option, to do this delayed finance option in the last few years. Of course, it's slowed down a little, so it's not as crazy, but you get in these bidding wars where these guys really want to get the bid of this deal or want to win the bid on this home, and they need to get cash quick to get the deal, right? And so what this does is relieve them of that. They can go in and use either, their own assets to purchase the home or, even a hard money loan. And what we will allow them to do is the day after, we can actually refinance them. We'll pay off the hard money loan up to 90 days. And to recoup their cash or their assets, we can do that up to 6 months. There's no hit for cash out for this. We do use the purchase price versus appraisal value though. So if it's something that they've gone in and renovated and they want to use value, then of course for rate and term, you only need 1 day seasoning. So they just need to make sure they're owner on title. And for cash out loans, we have a 6-month wait, but that's to allow them to use the appraisal value. So.
Fantastic. All right, next question. So TBDs, pre-approval turn times.
We will allow a TBD on the pre-approval, so you can submit those loans. All we need is an app and credit to basically do a pre-qualification for you. And on the pre-qual, it's going to give you all the instructions, all the details of the loan, pricing, options of the loan, and everything else. So you'll be ready to submit the loan. You do have to have an address, of course, to submit the loan to our underwriting portal. But up until that point, you can have a TBD. Turn times for those are 24 hours on the usual, 24 to 48 if we get into some crazy times, but that's max. And if we need VP, we can submit these if we have any kind of questions up front. we actually have access to the VP of credit risk up front, which is huge again, because we're held to totally responsible for these loans up front. So if we have a concern or a question or something we need higher ups to look at, of course, we can send it to our VP of credit risk, say, hey, I have a question about this old foreclosure, whatever the case may be. Or if we need an exception, we'll ask that up front before we send you the pre-qual, and that will follow the loan through the whole process. So, we make sure to take care of any situations up front.
Fantastic. All right. What are the requirements for a cash out refi using DSCR, max LTV and rate? I know we covered some of this stuff, but maybe you could bring us back on this.
So for the debt service coverage ratio product, you can go to 75% loan to value to get cash out. And so that's the max LTV. And the rates, there's just a quarter hit usually to the rate. So again, if you go on the pricing tool, just make sure to click cash out so that you have the ad in your ultimate pricing, the total price.
Yeah, fantastic. All right. Next question. What can you do as far as short-term rentals?
I love this question. They finally just gave us this nugget this year. So we still do not do condo hotels. I know. Woo-hoo. So, but they did give us a little teaser, which is that we can do nightly rentals and on the condominiums now. So that's really great. The things to look out for, of course, on these short-term rentals is that if you can do it yourself, we look at them really quickly too. It's a quick Google search. And if you pull it up and you see, one main page that looks like a hotel website where you can you can reserve a condo right there, it's more than likely a condo hotel. That's kind of a one quick sign. Or, if they have rental pools available, that whether they not do or don't hop in, we're going to actually consider that kind of a possible condo hotel. But if it's a short-term rental and they just VRBO the property or Airbnb the property, we love those. And basically you're just going to look at short-term rentals as comps, rent comps versus, a long-term or a monthly rental. So.
Fantastic. All right. Next question. If I can get it. Okay. What is the max LTV on DSCR? Can the borrower use gift funds and up to how much? And can the borrower close in his name or an LLC? Darlene wants to know.
Awesome. So LTV, again, we can go to 80% loan to value on the investor cash flow program. If they do or can qualify full or bank statements, we can go to 85%. Just like to put that in there. Gift funds are not allowed on investment properties for us. And so it would have to be all of the borrower's own funds and 6 months reserves. And the borrower can close in an LLC. We allow up to 2 partners in the LLC without exception. There are some rarities, there's some rare situations where we will make exception to that, but they do all have to qualify for the loan and be on the app and credit. So it's definitely, we don't offer any non-recourse loans. These are fully qualified loans that just basically are vested in the LLC, and there's no seasoning on the LLC. So it can be a new one, created for the property.
Perfect. All right. Next question. What is the minimum down payment and can an investor what is the minimum down payment investor can purchase properties? You want to just, one more time, the LTVs for refis and purchase for Larry's.
Yeah, so 80% loan to value is the max LTV. So.
Okay, fantastic. And what is the rent to PITI ratio you will go down to? I think that's
so. I think they mean the debt service ratio rate. Yeah. So basically, like I said, so we can actually at 80% loan to value, we're going to start at the 1-to-1 ratio. We will go down to 0.85% and stay at 80 if they have a 700 score or more or higher. If they have if it comes in too low, and we can actually choose to waive the debt service coverage ratio altogether. It's a waive the DSCR. So no DSCR at 75% loan to value with the 700 score. It's just a small hit rate.
Fantastic. And what is your minimum loan amounts?
I missed that. So minimum loan size is 75,000. They're going to drop the LTV, I believe, to 65 or 60 on that. So basically, it's 75,000 is minimum loan size, and our max loan size per guide is 1.5 million. Of course, send what you need to get, and we'll see if we can get exceptions on that.
Fantastic. And I'm assuming they're saying LA as in Louisiana. Is there any exceptions for lower Louisiana?
I think they're saying lower loan amount. I hope loan amount.
Oh,
for
yeah. Okay,
Louisiana.
yeah, that makes a lot more sense. Okay. Okay. I'm glad one of us has a.
Or yeah, or Los Angeles. We will, yeah, there's exceptions, but nothing lower than 75. That is a hard stop. So
Yeah, I don't think you can buy a bathroom in Los Angeles. So perfect. All right. So that concludes all the questions that people have submitted in advance. We got a handful of questions that have just been submitted live. So we're going to go to those questions. Thank you everyone for joining us. We are right now, we got about 20 minutes left here. So please stick around. We got seven questions so far, but please feel free to bring those questions coming in. So what is the current underwriting turn times with Angel Oak?
that's a good question. So we're closing, our underwriting turn times are running, up to anywhere from 24 to 48 hours in underwrite and conditions, and then 24 hours to CTC. We're actually, and you'll see them online all the time now, we're seeing on LinkedIn just posting of, CTC'd in 8 days, CTC'd in 7 days, 9 days. So we're getting these loans closed well within 30 days right now. And that's awesome.
For non-QM, it's just that's amazing. Great.
Oh yeah.
Right. So what about short-term rentals versus appraisers 1007? So if for instance, if the property has a history of being a STR, I guess a short-term rental, will they be able to use the current owner's numbers?
Not the current owner's numbers, but they will run a comp, the sales comps based on short-term rentals versus, annual rents or whatever. So they're going to get, they need to make sure that they clarify with the AMC up front that it's a short-term rental if they don't detect that, on their own. But they'll run, we are allowed to use the short-term rental comps now.
Okay, fantastic. Do you have an appetite for mixed use?
No, we don't. So that's a very good question. We do not have any options for mixed use properties and or anything that's over a 4-unit. So we go 1 to 4 unit. They must be full residential.
Okay, fantastic. How many months, years are required for the 1099 self-employed income?
That's a great question too. So the 1099 income product is based on our bank statement product. So basically it's exactly the same as far as requirements are concerned. They must have 2 years self-employment, and we can use 1 or 2 years 1099 form in lieu of 1 or 2 years bank statements plus year-to-date income. So that can come from an income statement or bank statements for the year so we can verify those deposits that have come in. But yeah, we still require 2 years self-employment.
Okay, fantastic. And we do have a couple of duplicate questions here. So we're at the last question. So if anyone has any other questions, you better ask them soon because we're going to be closing this down. Last question that we have here is from Dan. So if buying a short-term rental, an appraisal would just use other short-term comps to arrive at rental income?
Yes. So the rental income will show obviously whatever the appraiser shows at the bottom line. I don't know if you've ever seen a 1007 form, and they run it the same, but they're going to come up with what the gross rents are showing in the area based on other comparable properties. So they would be other short-term rentals. So I just lost my train of thought. On refinances, I was going to say, so we do offer refinances, as you know, and so there is an option on refinances. Say, for instance, if they would rather use, or they're getting higher rents, right? And so they just want to use their current rents or whatever they're getting on the property. Instead of using the 1007 form, we can take a look at their rents with 3 months payments, proof of payments, and a lease agreement, but that's not going to work on the short-term rental stuff. So on the short-term rental itself, you would have to have the 1007 run, from the appraiser, and they would just need to make sure they bring in the short-term rental comps, and then they'll have that posted on what those gross rents come in at. So they're significantly different.
Fantastic. All right. Next question is from Ryan. For reserves, can we use borrowers' business assets? If so, are there any restrictions such as borrower must hold at least 25% ownership? Would we need a CPA letter stating funds will not negatively affect business operations?
Yeah, so we can use 100% of the ending balance of the business account used based on their percentage of ownership. So yes, we would have to confirm what their percentage of ownership is to see what they are able to use as far as their amount of the, the amount of the funds that are in the bank account. So.
That's a great question.
Mhm.
All right. And Robert, you might have the last question here. I know that you have addressed this, but I'm still slightly unsure. So my scenario is I have two investors, borrower, co-borrower, that are ITIN. They own multiple unit investment properties already. Can your DSCR loan product work for them? One has 2 FICO scores and one has 3 FICO scores. Both middle scores are 767 and 708. The 708 is the 2 FICO ITIN borrower. Can we do this?
We cannot do that on our products. We only allow the ITIN borrowers to be on a primary residence only. And so we wouldn't unfortunately have any options for this borrower as far as being an ITIN is concerned on an investment property. So we can only do for national persons on the debt service ratio product or any investment for that matter. So no, we wouldn't have any options unfortunately for this person or this, borrower.
All right, fantastic. So we've got through everything. We got through everyone's questions. So Lisa, this is great. So please do me a favor, use that information, to contact the Angel Oak, run a scenario, like go to their website, play with the quick qualifier. It is awesome. And talk to the account executives. You'll see actually how they're just trying to find excuses to say yes.
Yeah, for sure. Absolutely.
Awesome. Lisa, anything you want to say, in closing to share with our audience here?
We're really excited to get out there and work with all of you guys. We also offer some incredible marketing tools that are customizable for all of you. We have the most incredible marketing team that is out there. We work day in out in non-QM. You guys have to sell a million different products and we focus on non-QM. Take a look at that. It's in our marketing portal and we have everything available from social media posts to presentations, as I mentioned, flyers that you can print digitally or print, incredible stuff that you can use to market to your sphere of influence or to borrowers individually or whomever you're looking to market this non-QM stuff. And you just don't have to recreate the wheel. We're there for you. And your account executives will be willing to hop in on any training, lunch and learn, marketing door to door, whatever you like. We love to do that stuff. So it's a win-win for all of us to get out there and get this product out in front of people who have been waiting for financing. So give us a call.
Well, the account executives participate in like webinars or seminars that are being done for local associations. Great. That's awesome.
Yeah, we love to do that kind of stuff. In fact, it's really fun for us to I've even actually gone marketing to different CPAs, financial advisors, and done a little cold calling with a loan officer and from anywhere from walking into realtors' offices to CPAs too, just to get an idea and a feel for it, and it's fun. We can just be the backup underwriter or whatever they want us to be, but just walk in to be the sidekick. It's a great opportunity for all of us to get it out there. So it works. We love to do those things.
Fantastic. All right. Awesome. Lisa, great hanging with you today. I really, really appreciate it.
So much fun. Thank you so much for having me. It was a blast.
Awesome. And thank you so much for joining us for another NMP webinar. We love these DealDesk formats. Listen, having access to products like this and your ability to instantly implement a marketing strategy from using tools that Angel Oak has made available to you and giving you actually the tools that you need so you can accurately price these loans and understand why these deals can be done is a very powerful thing. So everyone, good luck out there. Always hustle, as Angel Oak says. So All right, guys, thank you so much. Enjoy the rest of your Wednesday.
Thanks so much.